Hi there friends, today is Wednesday, May 8. Let's look at the charts for the euro and the pound sterling and figure out their further dynamics. The euro suggested long positions in the first half of the day yesterday because it grew in light of decent retail sales data from the eurozone. Retail sales jumped by 0.8% on year in March, much stronger than the estimated 0.6% increase and a decline of 0.3% in February. Germany's factory orders were also alright. So was the Eurozone's trade balance data. The reports on France were slightly better than expected. However, this euro could not overcome the pressure it was facing at a one-week high. As a result, the euro-dollar pair broke support at 1.0760 in the Asian session. A large sell-off will carry on later today because there are no fundamental reasons to buy the European currency. The pound sterling had bad luck yesterday. First, it recovered after nice data on the UK construction PMI. The index was better than expected, 54 against 50.3 in the consensus. But it did not help the pound. Meanwhile, the sterling is going down ahead of the Bank of England's policy meeting. Traders understand it's not a good idea to buy the pound at current highs. Selling pressure on the pound is escalating until it updates the low of the month. I expect the first buyers at 1.2470. Today, amid the empty economic calendar for the UK, demand for the pound will hardly revive. Now let's check the economic calendar. Today, the only report worthy of attention is Germany's industrial production for March. It's likely to disappoint traders as industrial production is expected to recover only in the second quarter. The figure is going to be weak that will put even worse pressure on the euro. There are reports of secondary importance for the UK, for example, the auction of 30-year government bonds. The pound sterling will hardly find any support. In the US, there is a report on oil inventories. All in all, this trading day is going to be quiet and dull. Risky assets are likely to lose ground in the first half of the day. My reasonable strategy will be to buy such assets at the end of the day after good downward corrections. Let's discuss the technical picture. On the 1-hour chart for the euro-dollar pair, I focus on the two levels, 1.0726 and 1.0702. I like to see buying activity at 0726 at a false breakout. So, it will be an entry point for long positions. The upward target is 1.0758 where the bears could enter the market. Thus, I will go short with the target at 1.0726. In case this level is broken, the next target will be 1.0702. Then, I will buy at 1.0702 during dip, anticipating a further climb of 25-30 pips. If the bears are not active at 1.0758 and the price settles above this level, the euro-dollar pair will rebound to the area it has been trading in the last few days. In this case, I will consider buying with targets at 1.0785 and perhaps 1.0812. I don't know what should happen today to trigger such a robust upward move. From 1.0812, I will plan short positions during a rebound, bearing in mind a 25-30 pips downward correction. Short positions from 1.0785 and 1.0758 will be relevant on the condition of a false breakout. And for the pound sterling, I expect active buying at 24.70. In case of a false breakout, it will be a nice point to open long positions with a target at 1.2510. After a failed attempt to break higher, the bears will enter the market again. If the instrument fails to settle there, I will go short with a target at 1.2471. If the price climbed higher, I will go short from 1.2535 and even 2569, bearing in mind a correction of 25-30 pips. If the buyers are sluggish at 1.2471 and the price declines, we could plan buy positions from 1.2427, anticipating a correction of 25-30 pips. Good luck.